Sullivan. I'm a former IRS agent and teaching instructor with the IRS. I worked there for 10 years. I've been in private practice tax defense for 40 years. I'm a national expert in IRS resolution matters. I shoot these videos at home because I'm more comfortable here. If you want to see me in a coat and tie, many of you come to me because you've seen me on all my national TV bits. I've been on all the major stations, and you can see me in a coat and tie. Go to my website at 777irs.com. You can see my team of former IRS agents in my national news interviews if you want to. They're boring, but what the heck. I'm famous for that. I have a bunch of followers and subscribers on YouTube. I appreciate everyone that comes to me. I really do. I take all the people that listen to me. I love that. I try to give you the information. Today I've sent a bunch of videos up. Today I'm going to be talking about non-filers in the IRS policy statement. Very important. What I'm talking about is the policy statement 5-133. The policy 5-133 probably results from half of the clients that I get in. For people who have not filed back tax returns in over 6 years, you may have never filed a return. You may have not filed a tax return for 40 years, 30 years, 20 years, 10 years. Policy statement 5-133 is a great policy statement for you. That means you only have to file the last 6 years tax returns. That's it. IRS literally forgives all the other years before that. There'll be a caveat I'm going to talk about at the end. However, you only have to file the last 6 years tax returns. That's absolutely great news for that. What I want to tell you is in having to file the last 6 years returns, you should first pull your IRS transcripts up. You can go to irs.gov and you want to pull your wage and income transcripts because that's going to tell you, or pull your record of account. Those two transcripts are going to tell you everything you need to know about where you stand with IRS, your last year you filed, and more importantly, it'll say your wage and income transcripts. You'll be able to tell what 1099s and W-2s IRS has on record. That's a big plus because you know what IRS has, so that's your launching point. So if you're a wage earner and you haven't filed, once again, go to irs.gov and pull up your wage and income transcripts and you'll find out exactly what people reported. Now, if you are a self-employed individual, it's going to be a little harder, but everyone in the tax industry knows how to reconstruct your tax returns based on bank statements, or let's just say you don't even have records. Well, there's indirect methods that people can use to go ahead and prepare your tax returns. An indirect method would be very simple. I know where you live, I know what your rent is, and I would apply a 2/3 ratio to 1/3. That is, usually most people spend 1/3 of the money on the home and 2/3 on everything else. So it's easy to reconstruct, plus you know what industry standards are for certain industries, so you can back into what expenses were there. Once you understand what's in the bank account, and you can kind of figure what expenses are, and that's how tax returns are prepared under reconstruction. Now, I'm going to give everyone a tip. It's a golden tip here. You have to understand this is big, very big. So you don't want IRS to knock at your door. You want to do this tax return filing the 6 years or less before IRS knocks on the door. Let me tell you why. There's a caveat in the policy statement 5-133. If me, being a former revenue officer, comes out and knocks on your door, and I think you have assets that maybe I can collect money on, I'm going to want more than the last 6 years. I may ask you to go back 10. However, if you go ahead and prepare the last 6 years and get them on file, IRS isn't going to come on and knock on your door. So the big tip here is file the last 6 years before someone like me knocks on your door because they may ask for more. The key here in IRS policy statement 5-133 is, what is your exit strategy on the case? What is an exit strategy? An exit strategy means when you file your tax returns and IRS processes an assessment and you come up with a tax bill of X amount of dollars, how are you going to remedy that case? What you want to do at that point is secure a financial statement a 433F if you think the case is going to the service center, or a 433A if you think the case is going to be with a revenue officer, and you want to know how you're going to close the case. There's generally 3 ways IRS closes cases. They close cases by a currently non-collectible, which means they can't collect a debt at a certain time. They will bring the case back out later, or IRS will go ahead and ask for a payment agreement, or you may want to file an offer in compromise. Either your practitioner may do this or you. So that at the end of the day is how you want to close out a person who has unfiled tax returns. Understand you always want to beat IRS. Most people should not be preparing these tax returns because you want to have them audit proofed. So I highly encourage you to go to a tax practitioner, an enrolled agent, or a CPA to make sure IRS takes the returns and processes them. IRS will only go accept 3 years on e-filing, and the last 3 years, the earliest 3 years, on paper file. It takes a long time to take a paper file return. Understand you can't get to your accountant or bookkeeper, enrolled agent, or CPA fast enough, and then you want to get an exit strategy right away and beat IRS to knocking at your door. My Mike Sullivan, a former IRS agent revenue officer, I would appreciate a subscription. I try to give you the information. Why do I need subscriptions and likes? It actually helps me move up to YouTube like a ladder. That's what it's like. The more subscriptions. By the way, I have 300,000 watch hours and 7,000 subscribers. I thank each one of them. Thank you for a subscription.